MCX IPF presents Commodities Trade.
There is no denying that the last one-year rally in base metals has been primarily driven by China's rapid COVID-19 recovery. This rally has also been largely traded in China. I have chosen copper as an example, where Shanghai copper volumes fell heavily in the first quarter of 2020 when China went into a lockdown, but grew rapidly over the second half of 2020. So when you look at the data from the top 3 global exchanges for futures traded in copper, it's evident on where the trade was in second half of 2020. That was the time that the metal rally was blazing hot. China was on a recovery with strong demand and even better economic data. And as the data suggests that the volumes on London Metal Exchange and Chicago Mercantile Exchange were weak and uneven, while Shanghai volumes kept surging month-on-month basis. By the end of 2020, the Shanghai volumes were 57% up year-on-year basis and the highest since 2016. Not just copper, 2020 saw overall decline in trading volumes on the London Metal Exchange, with the biggest volume declines coming in from nickel and zinc, where you saw a decline of more than 20%. So when you put all the trades together, the overall metal volumes fell 7% in 2020 and another 13% in the first half of 2021. While the policymakers in Beijing are now trying to take the heat out of the stimulus-fueled fires, the rest of the world is only starting to pick up recovery momentum. There are signs that just as the physical demand pendulum is shifting westwards, so is the trading activity as well. The LME trading volumes grew in the month of May for the first time in since March 2020, and we have seen recovery continue for June as well. The exchange, which is a primary metal price settler for the world outside China, hopes that the trend has turned for good.
MCX IPF presents Commodities Trade.
Brought to you by MCX IPF.